Now let's look at exercise 3. Now exercise 3, we're going to be dealing with the balance sheet. Okay. In your book, it says just to do the normal balance sheet. We're going to go ahead and make this a classified balance sheet. And when I say classified, what that means is we're going to categorize our assets and liabilities as either current or long-term. Okay, for the asset section, we're going to put anything that's equipment, building, land, furniture, fixtures, those type of assets that we call plant assets or fixed assets. They'll be listed under plant assets. And then other items such as like intangible assets, things like copyrights, patents, licenses, those will be long-term, or maybe other types of investments that we have in stock and such, those will go in long-term assets. So first let's look at our assets. Remember also we list our assets in order of liquidity, so that means what we can turn into cash the quickest within the next few months. So let's put, we have current assets, and our most liquid asset is cash. Okay, so cash has a balance of $800. Let's move this down one. Okay, then we have accounts receivable. So it's considered to be the next most liquid because we've already done the service or provided the product. We just haven't gotten paid yet. So the earnings process is complete and we just have to collect the money. Then we'll have office supplies, 900. And this is going to get us our total current assets. Okay. Then we'll list those plant assets. So here we have just equipment, and it's $19,100. And if you remember us talking when we mentioned accumulated depreciation, that was a contra asset, and it reduces the total overall value of the assets it's associated with. So when we list it on the balance sheet, we're going to put it right here, accumulated depreciation, and that was for equipment. And it's going to be a subtraction, okay? So of 1,000, we're going to subtract 1,000 from our total equipment. And this is going to get us to calculate our net book value, okay? So the net book value, is just where we take our cost of our asset and we subtract out the accumulated depreciation, okay? So we're going to take the 19,100, subtract out the 1,000. That gives us our net book value of our asset of 18,100, okay? So that's what's going to be listed over here. If we had more than one, we would list them all here and then get our total plan assets. But that's our total plan assets. It's just for the equipment. So we can go ahead and put that on here. All right. So then the next thing we'll do is we'll total up our assets. So we've got total assets. It's going to be the sum of our total plan assets, any long-term assets if we had them, and our current assets. So our total assets are $20,300. All right. So let's do the same thing with liabilities. We're going to have current liabilities over here. So these are going to be the ones that we have to pay within the next year. And if you remember when we list down our liabilities, we list them in the order that they're due, the order we have to pay them. And that would have to be really told to you, but most of the time it's accounts payable goes first. So we got $200 there. Then we've got interest payable, and it was 100. Okay, those things are our current or short-term liabilities. So those are going to be our total current liabilities. Then we're going to come down here and list our long-term liabilities. Now, the long-term liabilities we have right now will be like mortgages or notes payable, which is what we have here. And those were long-term, if you remember, because we usually have to sign an actual note, we pay interest, and they're for a longer term. So the notes payable is $2,500. Okay. And then we'll have our equity. Okay, so now we're going to have owner's equity. Now, owner's equity, the only thing in our owner's equity is that ending capital balance. So we have Dave capital. We don't remember in this owner's equity, we are not going to see net income, contributions, withdrawals. The only thing we have listed here on our balance sheet is going to be the ending balance that we calculated on our statement of owner's equity. That's the whole reason for that statement. So that's why we don't see any of those items here. Okay, then we're going to total up our total liabilities and owner's equity. And we got to do a total here. We forgot to do our total liabilities. And if we had more than one long-term liabilities, we would get a total there. But we only had the one, so I left it just by itself there. Okay. So our balances should equal, okay, the total assets should equal total liabilities plus owner's equity, which it does. So we don't have anything to worry about. We balance and everything's good. Okay. If you have any questions on the classified balance sheet, post them to the questions forum discussion board for this chapter. Okay.